We're jumping straight into Ondas Holdings today. Everyone is watching the price action, but the real story is the massive backlog surge and the raised 2026 guidance. You look at the charts and you see it was one of the most active stocks on, February 6th? And it's so easy to get distracted.
It is.
But when you peel it back, this isn't just a stock moving, it's a shift into what they're calling multi-domain defense autonomy.
Right.
I mean, we are talking about revenue guidance jumping 25% and a cash pile that sits at over $1.5 billion. That is a lot of dry powder.
Exactly. You're tuned into the Easy Money Show, where we make sense of the market's biggest moves. I'm glad you're with us. And today is interesting because you have this this classic setup, a company in the middle of a massive robotics boom promising the world.
Right.
And now we have to figure out if they can actually deliver.
If they can execute. It really is high stakes. So before we get into the weeds, make sure you subscribe and hit the like button. We do this to simplify the market for you. All right, let's get into the bull case. I mean, investors are piling into Ondas. Why now? Is this just hype or is there a solid foundation?
Well, to get the now, you have to look at the numbers they just put out. They really caught the street off guard.
The preliminary 2025 numbers, you mean? I saw the headlines. A massive beat, right?
Massive is the right word. They reported full-year revenue for 2025 between $47.6 and $49.6 million.
Okay.
Now, in a vacuum, that number sounds fine. But for context, that smashed their prior guidance by 23%.
23? Wow. Okay.
And if you zoom into just the fourth quarter, they pulled in nearly $29 million.
And what was that against their target?
That's a 51% beat for the quarter.
51% in a single quarter. That's not a rounding error. That's a surge.
It is.
So that makes me skeptical. Was this just one lucky quarter? Did they pull a bunch of deals forward from 2026 or something?
That's the multi-million-dollar question, isn't it? But when you look at the source, it doesn't seem like luck. This growth is being driven by their Ondas Autonomous Systems unit, the OAS division.
OAS, okay.
They're deploying specific, really high-demand hardware. We're talking the Iron Drone Raider and their Optimus platforms.
Let's pause on that. Iron Drone Raider, that sounds like a summer blockbuster. What is it actually doing?
It's counter-drone tech. Think about the modern battlefield, or even just border security. The threat isn't a huge tank anymore. It's a cheap $500 drone somebody weaponized.
So this is a drone that hunts other drones?
Essentially, yeah. Kinetic interception. And counter-drone is probably the hottest sector in defense right now. Everybody wants it.
So the revenue beat isn't just we sold more stuff, it's we sold the one thing everyone is panicking to buy.
Precisely. And it's not just a gadget, it's actual deployments. Military orders, border security. These are sticky, mission-critical areas.
Okay.
And that momentum is what gave them the confidence to do something pretty bold with their guidance.
Right. Let's talk about that guidance hike. Usually companies are so cautious, they want to underpromise, overdeliver. But Ondas came out and raised their 2026 revenue guidance to between $170 and $180 million.
Which is a massive jump.
It is. The old target was $140 million. So they're basically saying, we're going to find an extra $30 to $40 million. How do they justify that?
The backlog. You can fake optimism, you can't fake a signed contract.
And the backlog did what?
It exploded. Up 180%.
Yeah.
It went from $23.3 million in November to $65.3 million just a couple months later.
That is wild. Nearly triple the backlog in a quarter.
Almost. And that gives them what we call revenue visibility. It's not just hope anymore. These are signed deals waiting to be delivered.
Okay, so they have the contracts, but what's the secret sauce here? There are a million drone companies out there. Why is Ondas winning these deals?
This is where we get into their moat. It's the turnkey service. It's what they call drone in a box.
Drone in a box. Sounds like a toy. I'm guessing it's a bit more sophisticated than that.
Incredibly sophisticated. The drone lives in a rugged docking station. It deploys automatically, does its mission patrols a border, inspects a railroad, then goes home and recharges.
So no pilot needed. It's true autonomy. It's infrastructure.
Correct. But they've taken it a step further. Their multi-domain strategy is key to understanding the valuation here.
Multi-domain. You mean air and ground?
Exactly. They bought a company called RoboTeam, so now they have ground robots. The aerial drone can actually talk to the ground robot.
Wait, really? So the drone in the sky can signal the robot on the ground?
Yeah. Imagine the Iron Drone Raider spots a breach in a fence. It can send those coordinates to a RoboTeam unit on the ground, which then goes to investigate.
That's the holy grail, integrated autonomy. You send a robot, not a person, into harm's way.
It is, and crucially, it's all NDAA compliant.
Okay, unpack NDAA for us. Why is that acronym so important for this stock?
National Defense Authorization Act. It basically says if you want to sell to the U.S. government, you cannot have certain foreign components in your tech.
So no Chinese parts. DJI drones are out.
Exactly.
Yeah.
DJI is effectively banned for government use. Ondas is positioned as the compliant American-made alternative. They are filling that vacuum.
I see.
And they have proprietary tech called FullMax.
Full axe. Okay, another great name. What's that?
It's a software-defined wireless standard. It's like having a private soundproof highway for your data instead of using the crowded public Wi-Fi.
So it's a dedicated, reliable lane?
A very dedicated lane. For a railroad or the military, that reliability is everything, and it creates really high switching costs.
Ah, okay. So once a customer builds on that private network.
It is very, very hard to rip it out and go somewhere else. It makes the revenue really sticky.
Okay, so they have the tech, the compliance, the contracts. But a company growing this fast must be burning cash like crazy.
That's the typical story, but Ondas flipped the script. We have to talk about their war chest.
The $1.5 billion number?
It's staggering. After a huge equity offering, their pro forma cash balance is over $1.5 billion.
$1.5 billion? For a company this size, why do they need that much money?
It just changes the game. It lets them play offense. They can acquire companies like they did. They can scale up manufacturing to meet that $170 million target without worrying about making payroll.
But hold on, playing devil's advocate, raising $1 billion must have diluted existing shareholders like crazy.
Oh, absolutely. The dilution was real. But the argument is they traded a piece of the pie for a guarantee that they could build a much, much bigger pie. Cash is oxygen right now.
It's a comfortable position to be in. But, and there's always a but, let's pivot to the bear case. Because all I hear is hypergrowth and mergers, and that just screams execution risk.
Let's break that down even further. Because you're right, cash burns fast.
And this growth curve it's just so steep. Going from around $50 million to $180 million in 1 year. Can they physically build and deliver that much hardware that fast?
That is the #1 risk. Triple-digit growth breaks things. Supply chains, quality control, hiring.
Yeah.
Something always gives.
It's not like software where you just hit copy-paste.
Not at all. And remember, they're integrating RoboTeam and Apparel Motion at the same time.
That sounds incredibly messy.
It is. Merging cultures and tech stacks is a nightmare. You have different engineering teams, different code bases, any slip-up, any delay, and the stock will get hammered because expectations are just so high.
The market has priced in perfection.
Exactly. That guidance is a double-edged sword. If they hit $150 million, which is still amazing growth, the stock might crash because they missed their own target.
The narrative flips from growth rocket to failure to execute overnight.
In a heartbeat.
And what about the trading? It was flagged as most active. That means volatility, right? Hot money.
A lot of hot money. And what's really interesting is that the sentiment analysis on it is neutral, literally a score of 0.
0? How is that possible with all this hype?
It suggests that while retail is excited, the so-called smart money, the insiders, they aren't piling in yet. We haven't seen a cluster of big insider buys.
That's a bit of a yellow flag. You want to see management buying with their own money when they raise guidance that much.
It's a sign of confidence. And the other risk is policy. So much of this demand is tied to the defense budget.
The Trump-era military dominance policies.
Right. There's a lot of speculation that that trend will continue. And it probably will, but politics can shift on a dime.
So if defense priorities change?
Or budgets get reallocated. The demand might not disappear, but it could get delayed. And government contracts are famous for delays.
Okay, so massive opportunity, massive cash, but facing the chaos of hypergrowth. For anyone watching this, what are the specific triggers to look for in the next, say, 30 to 90 days?
The first and biggest test is Q1 2026 earnings.
Late April, early May.
Correct. And they don't have to be profitable, but they have to show revenues on track for that $170 million annual pace.
So no slow starts.
A slow start would be a disaster. If they come out and say, we only did $20 million, but the rest is coming in Q4, the market will panic. Investors hate that.
I need to show the machine is working now.
Precisely. Show the backlog is converting to revenue. And on the macro side, just watch the sector. The robo index was hot. Is capital still flowing into robotics and defense?
And what about that cash, that $1.5 billion?
Exactly. Watch Ondas Capital, their advisory arm. Did they go out and make another big acquisition? And if they do, did they overpay just to buy revenue to hit their numbers?
Ah, that's a critical distinction. Strategic M&A versus desperate M&A.
It is. And long-term, management's talking about a $300 million moonshot by 2030. Some analysts think even $500 million is possible.
A 10x from where they were.
But to get there, the key watch item for this year, for 2026, is a path to profitability. If they can flip from burning cash to generating cash while growing this fast...
That's the golden ticket, profitable growth.
It is. So if you zoom out, they're trying to become the operating system for autonomous defense, the windows of warfare.
And it feels like they have all the pieces on the board to do it.
They do. The money, the tech, the backlog. Now it's just a test of management. Can they conduct this orchestra without everything falling apart?
It's going to be a fascinating year.
It really is. They're betting the farm that they're the future of security.
With $1.5 billion, that's a pretty big farm to bet.
It is. The question isn't can they grow. The demand is there. The real question is, can they manage the absolute chaos of growing this fast?
And that's what we'll be watching. That's the lowdown on Ondas Holdings. Keep your eyes on that backlog number.
Absolutely. That's the truth teller.
We'll leave it there. Make sure you subscribe and hit the like button so you don't miss our next breakdown. We'll see you next time on the Easy Money Show.
Thanks for listening.